Well, Liberation Day is rapidly approaching, but who or what is being liberated, and what will it mean for financial markets? So hi there everyone, welcome to the Traders Circle Weekly Market Update. Today is Tuesday, the 1st of April 2025, and before I start, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for yourself. So, Liberation Day. It's tomorrow, the 2nd of April. He deliberately put it on the 2nd of April so people didn't think he was joking. It's the day that he's going to enact, Trump I should say, will enact his reciprocal tariffs against all the major US trading partners. That includes people who don't tariff the US. So it's been suggested that Australia is going to be tariffed on our exports to the US, even though we don't tariff US exports to Australia. There's been plenty of sort of excuses given as to, why we're going to be hit by reciprocal tariffs, and those include the fact that we've got a goods and services tax, a GST, despite the fact that US has value-added taxes or similar sales taxes. But I think a more realistic answer is that US want us to change some of our trade policies, and these are things like biosecurity laws, the social media ban for youths, and that sort of thing that US industry groups and US lobby groups would rather the Australian government didn't have in place. So it's basically an attempt to influence, Australian sovereign economic policy if we do see Australian tariffs, and I would suggest that's not a great thing. Regardless of whether Australia is or isn't tariffed, probably will be, maybe 3%, but regardless of whether we are or are not, it's going to come down to the tariffs on other parts of the world. That's what the market is going to react to. So it'll be the tariffs on Europe, it'll be the tariffs on Asian trading partners. And I think the markets have been going pretty hard, trying to determine what these tariffs will be, how much they'll be, and to do some sort of pricing them into markets. Now, it's impossible to price them in because, maybe not even Trump himself knows what the tariff rates will be. It seems like a little bit, the US economic policy is being made up on the fly, and so, impossible to know what the actual rates will be, let alone what effects that'll have on, the global economy. So 2nd of April, tomorrow night, I think about 5 p.m. Australian time, and very difficult to say what the effects will be, whether markets will fall, whether they'll rally afterwards. It's going to come down to whether or not they're better than or worse than the average investor expected. Overall, though, I would say that tariffs are quite a negative thing for the economy, and we've seen some pretty sort of dire initial data from the start of the Trump administration. So US economic growth forecasts are really starting to push lower. We've also seen inflation start to tick up after the tariffs against Canada and Mexico. So tariffs in the short term increase prices. We did see the US Federal Reserve basically say that they thought these price increases from the tariffs would be transitory, or basically that they'd only be there for an initial bump in prices, and that prices wouldn't keep going after that. Although in our own Reserve Bank statement today, they were a bit less convincing about that. We've also seen plenty of forecasts for the US economy to start heading towards recession. So this is the Atlanta Federal Reserve, their growth forecast for the first quarter GDP growth. It's dropped very substantially into the red. Currently they forecast about a 2.8% contraction in GDP in the first quarter. Now, US GDP first quarter will probably be better than that number. This number is made up of a handful of sort of economic data points, and the big sort of first one was the trade data for February, which was obviously going to be one of the most impacted by the tariffs. And so with that February data point, we saw the initial drop lower, where it was running around 2% growth. It dropped to a 2.8% contraction. Usually though, after a few more data points come out, the growth forecast starts to come back towards consensus, or come back towards where it actually ends up. So as the Atlanta Fed GDP now data rolls on, it should get more accurate as the quarter end approaches. The fact that it hasn't come back up into the positive is not a very positive sign at all. And indeed, it's not the growth forecast that's starting to come back up, but it's the economist consensus forecast that's starting to come down to meet it. And I would say that, unless we do see some respite on the tariffs, some sort of deals made, it's instead this blue line that's going to keep coming down rather than the green line that's going to come up. And that does sort of point towards US recession. It does point towards, more market selling, and it's just really not a good outcome for markets in general. To be honest, with all that's gone on, I'm actually surprised that markets haven't sold off more than they have. Things are looking pretty bad out there. And perhaps the only thing saving markets is the extreme amounts of US government net spending. Currently, US government is printing money at the fastest rate anyone in history has ever done. And that is flowing to asset prices. That is helping to prop prices up. Whether or not that can stave off a massive sell down, should the economy head towards recession or not, I don't know. But it's going to be something to keep an eye on. Finally, we had the RBA today. They kept interest rates on hold, 4.1%. That was pretty much expected. I think 90% expectation they weren't going to do anything this time around. The vast majority of the market expects that we will see a rate cut in May, so at the next meeting in 6 weeks' time. But reading through their statement today, they weren't that sort of convincing that they were going to cut at the next meeting. They did acknowledge that inflation has come down, and I think the last week we saw monthly inflation come in weaker than expected. I think at an annualized rate of 2.4%. But they also said that, there was quite a lot of uncertainty and the uncertainties were increasing. They also sort of pointed towards the tariffs, things like that, and, just the policy uncertainty coming out of the US, and, said that that was something that, they'd have to keep a very close eye on. Many were expecting that this statement today was basically going to be the harbinger of a rate cut in May, and it just wasn't. That was not the case. If anything, it was much more of a 50-50 statement than the dovish statement that was expected. So I do think that's sort of worth keeping in mind. It is a bit at odds with the US Federal Reserve statement from their recent meeting, where they basically sort of told us not to worry about Trump, not to worry about the uptick in inflation that the US has seen, and that they still think that 2 rate cuts are coming this year. And it does sort of, I guess, highlight a little bit of a difference between the Fed in the US and the RBA here. The Fed's happy to tell you that, everything's under control, even though history shows they usually don't have it under control. And the RBA is more happy to say, we're uncertain, we don't know, we're going to wait and see. While the US approach might, at first glance, seem better, seem more impressive, I actually think the RBA approach is better. It's certainly more honest. And, while it might not provide more confidence in the short term, I think it provides more confidence in the long term. So let's have a look at the charts for this week, guys. We can see that the Australian market, it fell about 10% from the peak in February to the low in March, and that is the 77.50 level that it fell to. Found some support there, rallied up to 8,000 where it found some resistance, and then it saw a big drop on Monday. We've retraced some of that today. I would suggest that we technically look bearish back towards the 77.50 level, but whether or not we do see that additional selling is going to come down to US markets. So US markets were in a very similar pattern, but we actually did see them come back to their key support level. And so this is the US S&P 500. They also had that 10% fall down to about 55.20. They also bounced back up a bit, and then they also showed a bit of a bearish signal. So on Friday, they had a strongly bearish signal, and then overnight in their Monday session, they actually completed that bearish signal to the support level before bouncing up. They were down 2% on open overnight, and they bounced back up into the green. If they'd held around the opening level on Monday, we probably would have achieved that 77.50 level for our own market, but their bounce overnight meant that we didn't actually see that completion for our movement today. Whether or not we do complete and move back to 77.50 is going to come down to what the US does tonight, and then perhaps what the reaction is to Trump's Liberation Day tomorrow night. So we'll wrap it up there for this week, guys. If you have an idea, let us know in the comments whether or not Liberation Day will be the day that the US economy is liberated from international trade, whether or not it's the day share prices will be liberated from the stocks, or whether something else is going on. Hopefully you guys enjoyed this one. If you did, click like, click subscribe, and we'll see you guys next time.